We're beginning to see the cracks in the Australian housing market now, and this could mean the start of the end of the housing boom. In this video, I want to go through all of the states in Australia as well as the regionals and see how they've been performing, not just in the last month, last quarter, but also the previous year. If you are interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. In this video, we're going to go through what could be the end of this housing boom. We're starting to see the cracks come through. We're starting to see affordability being a concern.
Because it wasn't already.
Then we're seeing the uncertainty and fear around what's happening overseas, what's happening in Australia, and the eventual rate increases that the RBA will introduce. Let's go through some stats and see what they're saying. Australia's house price growth has moderated as Sydney recorded a decline for the first time since September 2020. Sydney's house price growth rate slowed by 0.1% in February, the first time in 17 months, according to Corelogic's monthly home value index. National house prices rose by 0.6%, down from January's gain of 1.1%. The peak of this cycle was 2.8% in March 21. Corelogic Director of Research Tim Lawless said the pace of growth had trended downwards since April. This essentially means that over the period from April 21 to now, being March 2022, we've seen a gradual slowdown at the rate of growth we've had in Sydney. Now, we're generalizing here in this article to go national house prices have done this, whereas we know for a fact that there's certain areas, different states have actually performed a lot better than others. And this is where a lot of people get caught out, where they actually view the entire market as a whole. I've made plenty of videos around this and why people look at headlines and say the pricing of housing markets is unaffordable. It's all going to come down by 10, 20, 30%. But in fact, we know large parts of Australia are still very much affordable. Sydney and Melbourne have shown the sharpest slowdown, while Melbourne housing values, 0%, were unchanged over the month, following similar results in Sydney of 0.1% and January of 0.2%, he said. Slower growth trends are emerging for all capital cities and broader state regions. Brisbane, Adelaide, and Hobart all recorded a rise of more than 1% in February, with Brisbane and Adelaide also recording a 7.2% and a 6.4% rise over the 3 months leading up to February. So we can see already the distinction between Sydney and Melbourne and how those prices are so much higher than what you get in Brisbane, Adelaide, and Hobart, which is where we're seeing that flow of money go to. Melbourne's house prices only rose by 0.2% over the same 3 periods, and Sydney's price by 0.8%. Now with Melbourne, it's important to understand that due to the pandemic, due to the restrictions that were there, a lot of people had that internal migration out of it. So I made a video about this. You can definitely check this out after this video. But if you're wondering, why did Melbourne not grow? And it's because we had those issues with what the Premier was doing, and that caused a lot of people to shift out. Lawless said higher than usual advertising stock in Melbourne, up 5.5% more than a year ago, and Sydney up 6.3% was a major factor. The cities where housing values are rising more rapidly continue to show a clear lack of available properties to purchase, he said. This comes down to the simple saying I have for property prices. If supply goes up and demand goes down, we see prices go down. If we see demand higher than supply, we will see the competition mean that there's more people wanting to buy those properties and those property values go up. What we're seeing now is more advertised stock, which is supply. So as supply goes up and demand goes down because people are scared, the RBA might increase rates, you're seeing banks already do it, maybe we're gonna see the housing market collapse, then we see these prices go and soften a little bit because there's more choice for people. Suddenly you don't have to run around all the time and say,
I've got to buy this property ASAP.
But this is not felt across all of Australia, and that's very important to note. Total listings across Brisbane and Adelaide remain more than 20% lower than a year ago and more than 40% below the previous 5-year average. Again, it's not felt everywhere. So if people just sort of read the first headline of this video or they read the first headline of this article, they would have said,
oh my God, I better sell my property.
But what happens if they're sitting in Brisbane or they're sitting in Adelaide? Their prices might just take off because there's not enough supply in those markets. AMP chief economist Shane Oliver said he expected Sydney and Melbourne house prices to peak soon. Sydney and Melbourne prices look to peak by mid-year if they haven't already. But laggard cities like Brisbane and Adelaide and possibly Perth and Darwin, which are less constrained by poor affordability, are likely to be relatively stronger this year, with gains likely to persist into the second half, Oliver said. Now, I think it's going to actually go well into 2023, 2024. I don't agree with what this economist is saying. And these were the same economists that were coming out in Feb and March of 2020 and said, hey, the prices are all going to drop by 30%, probably best to sell. I know people firsthand that were actually listing their properties, panic selling, because they thought, hey, if I sell now, markets go down by 30%, I could just come back and then buy again the same property. But it doesn't work like that. And what we're realizing is we can't just listen to these economists, and you definitely can't listen to influencers and YouTubers on the internet pretending like they know what they're talking about. So again, I don't give financial advice and you can do whatever you like. But for me, I just don't see how an increase of 0.2% or 0.25 or 0.5% increase in cash rates will cause the market to collapse. Because what we're not considering here is rental growth. Now, if we see the housing market collapse, I've always said this. I've said it's gonna start with the emotional buyers overpaying above their means for owner-occupier properties. It's simple as that, because they rely on their jobs to then go and fund the property that they've purchased, which they believe is an asset, right? Now, if you go in and you purchase a property which relies on your income to just hold that property, if you lose your job, you lose the house, okay? As an investor though, what we're seeing is a shortage of supply of good rental properties. So we're seeing a huge increase in rental demand. And again, depends on what area you're buying in. And when we purchase the property, we're like, okay, it's gonna rent for $340 to $350. By the time they actually settle, because the market is so supply constrained, it actually goes and rents for $380 to $390. Obviously the client's happy, we're happy, and that increases our cash flow. Cash flow is very important, especially when we get to times where property prices might actually dip or they consolidate. Well, if they consolidate or they dip lower, at least your cash flow allows you to hold that property during the tough times. That's why I call it the foundational bread and butter stuff. But if you go out and you actually lose your job because your employer now has to pay higher amounts on their debt, they can't hold as much, then they're going to get rid of the people. That leads to higher unemployment and then leads to house prices collapsing. We will start seeing that happen in the housing market with the emotional buyers first. Now we can see in this graph right here, Sydney and Melbourne basically doing nothing over the last month, and I would go to argue they've pretty much done nothing for the last quarter as well. When you compare that to what Brisbane and Adelaide are doing, you can see 7.2%, 6.4% over the last quarter is phenomenal. When you then zoom out and you see what your total return has been, you can see 25%, 15% in Melbourne, but then you're going into Brisbane 34 and then 30% as well. So they've had amazing times. Hobart has just been like this wrecking ball, has come out of nowhere a few years ago and they've just continued to kick goals, which is amazing. But then you come into seeing what capitals have done versus the regionals. And you can see in the capitals, 0.3% over the last month, whereas you can 6x that for the combined regional performance over the last month being 1.6%. We are still finding that listings are at all-time lows, they are trending down lower, and there's so much more demand as people get accustomed to borderless investing. You zoom out even further and you can see a clear disparity. Capital cities at 1.8% for the quarter, 5.7% for regionals, and then annually you're going in at 19.2% versus 25.5%. But the biggest kicker here is affordability, right? It's the median value of the average of all capital cities is $808,000 versus the regionals at $564,000. In addition to that, you've got increased rental yields, which allows investors to hold a lot more for a lot longer. Nationally, annual house price growth was 20.6% higher during the past 12 months, down from 22.4% last month. Oliver said house prices were expected to decline further in 2023. After 22% growth in national average home prices last year, we continue to expect home price growth this year of 3% and expect a 5 to 10% decline in average prices in 2023, Oliver said. So basically saying that once we get into 23, 24, 25, we're probably going to see a decline, and that probably brings us back to prices of what we saw mid last year. He goes on to say that later this year into 2024, likely to be around minus 10 to 15%, which would take the average prices back to levels of around May last year. Now, a lot of people sitting here watching this video could be licking their lips because now they can come back to the negotiating table and say,
Hey, if I can buy property prices in 2024 that they were in 2021, I'm making a profit.
and you might be right. But for me personally, that's like timing the market and trying to time when you get out and when you get back in. The problem is that with property in general, you need to have the long-term view. Now, these journalists, they could come out and say, well, okay, for this reason, this is why property prices actually didn't stop. They actually continued going up. Well, sucks to be you because you tried to time the market and now you're screwed. And that's a really big issue for people because you get analysis paralysis, you see some videos, you see some articles and you're like,
Oh my God, housing prices are going to crash. Why would I buy now? I'll just buy in a couple of years' time.
but you're trying to time the market. If you stay in this market long enough, it will give you what you want. I personally don't even think we're going to see a decline of 10, 15, 20% in specific locations we're looking at. When you start looking at some of these markets in Sydney, I live in Sydney, I've been born and bred here, I love Sydney, and I will continue to live here. But when I see some stuff that's happening in this market, I'm like, mate, if we see a crash, we're gonna see it crack from here and all the way through. That's where I think it's gonna start. The regions are continuing to outstrip the capital cities, with all of the rest of the state's house prices increasing 3 times faster than the house prices in all the capitals, up between 5.7% to 1.8% during the past 3 months. Rents rose in February by 0.9% and 2.4% over the past 3 months, with Sydney and Melbourne recording the highest growth. We're seeing rental growth in a lot of these areas, and that's going to counteract and offset what the rate increases will be when it comes to that time. The other part we need to factor in is a lot of people have been securing cheap debt for a while. They could come in and say, well, we can fix our rates for the next 3 to 5 years, continue paying what they were paying, and despite the banks increasing, it won't affect that market. When you're looking at regionals, as well as you're seeing Adelaide and Brisbane, you're seeing that these areas are quite affordable. You add to the mix Perth, which I think is severely undervalued, you're now getting into an area where people could go, Sydney and Melbourne don't really make sense to me because you get no cash flow. And if we do see this market turn, if I don't get the actual capital growth, I'm holding this property where I just keep pumping money in and losing money in the hope that property prices go up. Hoping and speculating is not the game here. You're taking a gamble. You may as well go to the casino, go for red or black, and you might have a better chance at making money that way. For me, investing takes a lot of fundamentals. It takes a lot of experience, as well as a lot of data mixed with consumer behavior and understanding patterns. If you are interested in more content like this, definitely subscribe down below and let me know what your thoughts are. Do you think the Australian property prices are actually going to drop here and you agree with some of these economists, or do you think the opposite's going to happen? I'd be keen to know. I'll catch you guys in the next one. Thanks, guys.